Going live.
Everybody in the lobby? Or in from the lobby? I think we're there.
We should be live.
Cool. Well, hello, everybody. Welcome to this month's Flight School Connector. I'm Chris Moser. Hopefully you recognize me. We've got two special guests today with us that I'll introduce here shortly. And then we've also got Stephen Schroeder behind the scenes. And then Elizabeth is currently on assignment, although she may pop in and join us here. So we'll see. But, oh, there she is. And look, Jamie, we have Jamie Beckett on the line as well. Awesome. So Flight School Connector this month is going to be dollars and cents, Flight School Financing and Solutions. And you can see right there on your screen our two special guests. We've got Austin Elsey from the Chief Credit Officer from FMS Bank in the green shirt. Austin, you can wave or say hi. How's it going? Glad to have you on board. He's gonna he's got a great program. He's going to give us some tips, and we'll go over some of that big overview. But the big part is he's got a really great program that they're running for flight school financing. So I think you guys will be interested in that as well. And we've got Adam Meredith, our own president from AOPA Finance. There's Adam. So glad to have him, and he's going to be able to also give us some tips, not only on flight student financing, but also for aircraft purchases as well. So give us some inside information. And the big part for this, you guys, is they're going to do relatively brief presentations near the beginning, and then we're going to open it up and let you pick their brains, because these guys have a wealth of information about financing. I know Adam even took the challenge and is going to make financing exciting, was part of the deal today. And both Austin and Adam are going to do this, so they're going to dazzle us with the finance talk. So we're looking forward to that. So before we get started, one thing I just wanted to mention is we are very fortunate that Sporty's Pilot Shop has come on board as a sponsor for the program. So we're really excited for that. So I can clearly say that Flight School Connector brought to you by Sporty's Pilot Shop. But one of the things I wanted to share with you is that they do have a dealer program. So if you didn't know about that, you can see some of the benefits there on the screen. Basically that they will give you some discounted prices, wholesale pricing, and work with you on stocking your shop. So if you're looking for a supplier for your school's shop, there it is, and you can look at it at sportys.com/dealer. All right, so on today's agenda, we're going to be looking for the background and options, understanding the background and options for both flight training financing for students. So that's kind of getting money for people to finance their training with you. And then also about aircraft financing, getting that money so that you can try to get an airplane. And especially because there are some challenges we know for flight schools in getting that financing. That's something that we're going to learn about. And then included in those presentations are some tips and options for getting financing for your schools and your students and things like that. So some ways to help work and get that. So that said, that quick intro, let's go ahead and get started. I'm going to introduce Austin. Actually, before we do that, let's roll the poll. We did want to get an idea of our audience today. What type of financing do you need most for your school? Is it student flight training funding, aircraft purchases? Is it both? None? Like, I'm good to go. I don't really need any financing, although I would assume you might not have come to this meeting if that was the case, or maybe there's some other type of financing. So there's the form just got on the screen. Just click your choices, or choice, I should say, and then hit submit, and we'll find out what happens. Let's see what everybody's thinking out there. All right, we'll see in the chat. I think we'll start to see the results coming in. All right, I'm just waiting on that. And then Stephen, I'm not seeing it necessarily, but let me know when you see that most of the folks have participated. Oh, never mind, I see it now. There we go. So we'll give you guys just another moment there. What are you mostly interested in? Got about 8 responses. And we'll give it just another moment there, and we'll see. Let's see if we can get to 10 responses. Can we get 2 more? Do you see the poll on your screen there? All right, so we can see our results. There we go. Perfect. Thank you, guys. I appreciate that participation. So we see that clearly over half of you are interested, 54% looking for student flight training financing. And I know both of our guests here today have some information, tips, and things to talk to you about that. We see about 9% with purchases, and then 36% saying both, that they could use both. So it's definitely seems like student flight training is really strong, and then the combination of both with the aircraft purchases kind of being on the end of that. So that said, let's go ahead and give the forum to Austin. And if you wouldn't mind, dazzle us. Or just give us some good information would be great.
Well, and it's very exciting that nobody marked none. So everybody should be attentive and listening to both me and Adam. So that's always reassuring. But, I guess this is a really timely discussion, at least in my world, focused on just the student financing side. We're exiting the pandemic. We all knew heading into the pandemic that there was already a pilot shortage that was coming up. Since then, we've had early retirements, furloughs at the commercial airlines. So I think this problem is just going to grow bigger and bigger, and so there's going to be more and more emphasis on getting students through programs, and in order to do that, we need to make sure that it is available and affordable for these students. And so student financing is something that we focus on here at FMS Bank. It's a unique program. And so it's something that we want to highlight because there are other options out there. Obviously, we're not the only option, and just kind of highlight what we see in the market, what are things you should be considering, and how to choose those. So one thing that is kind of worth highlighting, and where I'm going to start this presentation, we have seen through this pandemic also some of the major players or some of the more traditional players exit the market. So we know Wells Fargo in particular has exited all things student loans, so not just the pilot student loan financing, but all student loans. So we know that they were kind of a go-to for a lot of the flight schools, and a lot of the calls we've been getting is trying to find a replacement from them. We know that Meredith is also in the market, so just some free advertising, I guess, for those guys. But they've kind of pulled back a little bit or tightened their reins a little bit too. So we've seen a lot of shift in this program, and hopefully that's kind of maybe an opportunity for us to make an introduction. There are a couple other regional options we've seen. So I know Carolinas has a special program just catering to those states. But definitely something that has seen a lot of shifts, and so I think it's a very timely discussion. So the next page kind of dives into what you should be looking for, or maybe some key components to consider when you're choosing these. So we like to focus our program at the student first. If it doesn't work for the student, then we really don't understand maybe the point in offering it. So the first fit we always see is starting at the students, making sure it's acceptable for them. One of the first places we start is the capacity, or just what does that loan process look for at the student. So does the student just do a one-time application and they're approved for the entire program? Or we've seen some instances where they're going to a traditional bank and just getting a general unsecured loan, and they have to go back and, every time they start a new part of the certification or a new process, they start a new loan, and a lot of those traditional lenders require them to pay off the first loan. So that makes the process really drawn out, really cumbersome for the students. So if you can find somebody that does kind of a one loan all and done, that definitely is a lot beneficial. The other thing that's important to consider obviously is cost, and cost comes in two aspects for the student. So obviously it's a loan, so we're familiar with the interest rate. But the other thing worth considering is we have seen some competitors enter the market with what I might call a teaser rate, or a lower rate than usual, but what they have baked into the loan is a high origination fee, and by high I've seen 3 to 5% of the loan is rolled into an initial origination fee. So that can be cumbersome, and something just to keep in mind as you're looking at different options. Just what is that cost to your students, so you don't put them in a bad spot either. The next comes to once we get the loan and start the repayment, what kind of affordability or how is the student going to be able to handle those payments? So first is the timing on when those payments start. Is there a grace period? If it's kind of framed up like a traditional student loan, traditionally they don't make any payments during the school process, and there is a window there before payments start up. We do specifically 60-day window. I've seen some as long as 6 months, and then I've seen some payments that start as you're in school. So definitely trying to figure out what's going to work best for your students. And then also find out what that expected payment looks like. So that kind of leans into all the other factors that go into the loan. How long is the repayment? What is the interest rate? And when does that payment start? So, you want to make sure, knowing these students, once they graduate, are going to most likely go into that CFI role to start logging their hours. And that's not always the most financially lucrative for the student, but the end goal being, becoming a commercial pilot is rewarding. So making sure they can still manage those payments in that interim step as a CFI as they're logging their hours. And then finally is any collateral required of the students? Do they have to put up, a home or some other collateral? Do they have to have a cosigner, or is this truly the traditional student financing where it's unsecured? So. Moving on to the next aspect, and maybe a 1B as far as importance, not necessarily trying to degrade this too much from the students, but also it needs to fit the school as well. And there are some opportunities here outside of just being able to grab more students. We see a lot of these financing options provide marketing. So they'll do advertising for your school. They'll let you feature, the actual product on your page and get more word of mouth or get more traction for your school. So, that anytime you can get marketing, especially if it's coming at, relatively low cost or zero cost, if it's just part of being in the program, is definitely beneficial. Next is the vetting process. So, asking the financer what exactly gets the school as part of the program, what's the responsibility of the school, how do we determine, what students to put into it. All that goes into consideration in just what responsibilities are going to fall on the school. Disbursements is another key component. So most important, I guess, in my world, and I kind of frame this up from the traditional banking perspective and risk perspective, do those funds go directly to the school or do they go to the students? And I always like to joke, our program specifically sends the money to the school, and the thought process is that the student doesn't roll up on a brand new motorcycle the first day of classes, using those funds for other purposes. So we want to make sure the funds go to the school, are used for the school, and allow the student to complete it. And then secondly is, how do you get the funds? Do they all come as a lump sum for the entire school program? Or do you have the option of dividing them up just in case, a student gets through just the private pilot licensing, decides, maybe the commercial pilot, the full process isn't for them and backs out. Do you have an obligation to refund those additional funds that weren't used, or how's that divided up? So kind of important to make sure that's an option. And then finally, the requirements of the school. Is there any cost to participate in the financing program from the school's perspective? Are there any origination fees that the school needs to be aware of? And then are there any clawbacks or guarantees that's required of the school if something does go wrong with the student repaying the loans? So those are all some key components that we've seen in our program and other programs, and something to take into consideration. And then finally,
Thanks,
oh, go ahead.
Good. No, sorry. Go ahead, Austin.
Okay. I was going to move to the next slide unless you had something specific to schools.
No, one of the things maybe that we'll ask later would be some of what do you see as fair requirements for these types of things, and maybe that's something we can address in the Q&A.
Yeah, definitely. And then wrapping up here, so I can hand the baton off to Adam and be a lot more entertaining, hopefully. What should you be looking at of the financer? What are some key considerations there in deciding who to go with? Obviously, viability is top of mind, especially with Wells Fargo exiting the market and leaving a lot of schools hanging without a good alternative, and being a
audio there?
Yep, sorry.
There it goes. Now you're back.
A fairly quick exit from the market left a lot of schools scrambling. So, some things to consider: how long they've been doing the business, and what would be some triggers where they would need to exit the market. Obviously there's regulatory pressures on banks. There's, we're seeing a revamping of the Consumer Financial Protection Board. or bureau. And so I think those things could be key considerations as we move forward. And the change of administration is probably going to be a little bit more consumer friendly and thus regulatory heavy on the financiers. So those are things that we just need to be aware of and how they could impact the overall financer. The next aspect, servicing collections, are these handled by the financer themselves or do they outsource these? A lot of times because that consumer lending world is so heavily regulated, a lot of times that servicing can be outsourced just to make sure that it's handled the correct way and doesn't become too burdensome for the financer themselves. Reporting, do you get insights to how your portfolio is performing, what's in the pipeline, how you do the final certifications, that kind of thing. So, it's important to understand that aspect of it. And then finally, requirements, how do you qualify with that financer and what is their onboarding? So, do they require a certain strength of the school? Do they look at your financials before adding you to the program, that kind of thing? So, these are, I guess, a really 5 to 10 minute quick overview of all the things that come into our mind when we set up our programs. And we can dive a little bit deeper into that. But these are definitely the areas where if I was selecting a provider, those are the areas I would focus in on. So with that, we'll move on to Adam here and talk a little bit about his financing world.
Thanks, Austin. When Chris asked me to do this, I thought, why does anybody want to know anything about financing? This is probably the single most boring topic that anybody could want to know anything about. And I meant it, but nonetheless, we got people here. The truth is, actually, I've done a number of these things over the years with, having been with AOPA, and it is one of the things that there's a lot of people that do have interest in understanding how financing works, because I think there's this sort of mystique about it, like it's rocket science. It's really not. It's kind of Austin was laying out in what he's talking about. It's kind of a pretty straightforward process, but I think there's a lot of people out there who just may not come from that background, a background of finance, to know how it works, and so there's interest in it. So anyway, I don't know if I can entertain you, but I hope to at least not have you falling asleep. So that's about all I'm gonna promise on my side. With that said, let me talk a little bit about our flight training program. I think when we started, let me just take a quick second. We started this program back in 2013. It was at AOPA. It was originally just for financing aircraft in general. And within like 2 months, I was overwhelmed by how many people were reaching out to us saying, can we get training for flight training, or financing, I should say, for flight training. And so that was one of those things that took us a couple, 2 or 3 years to find a partner that we, could lend with, that was going to be able to do it. And for us, I think one of the big things was we wanted this process to be pretty flexible for folks, and so that's kind of the way that this program is set up. With that said, we've got an online application that makes it easy to just fill out, and they'll quick decision it typically, within a day, or even I think right away if there's any, if it's a straightforward application. And the other part of this is, funds can be available in a few days for your students. So, it was designed to make it easy and flexible, I guess, is really the best part about that. The other part here in terms of things, and Austin was hitting on this too, is affordability, right? I think as a flight school, you want to make sure that, you're not overtaxing your students, and in the sense that you're going to burden them with something that they may not be able to, to overcome. And in broad strokes, the way that this works is the payments are about $25 a month, roughly, for every $1,000 borrowed. So that's kind of how the back of the envelope, if you will, to use pardon the expression, but for how we, figure that out. So keep that, I guess, in mind. You want to go to the next slide for me, Chris? So the other piece that, I think is important for people to think about is who's going to be able to qualify for this. And there's going to be, these loans are basically approved on someone's credit, what their credit rating is and their income. this slide, it's funny that we lead off with, the credit score because, I think at the end of the day, credit score is kind of more of a gating thing than like a real test of how strong somebody is. Generally people either have a good credit score or they don't. And then I suppose there's, maybe a little bit of gray in the middle where they're kind of an okay credit score. I will tell you, aside from as a quick aside from, student financing, but just financing in general, most of what we see is folks have a credit score of over 700, and that's probably pretty typical. That said, what we're dealing with here is a lot of typically a lot of people that don't have any real credit experience to speak of, and so for those reasons, their credit scores are going to be lower, and that could be a challenge. And so the minimum credit score for this program is 650, and they're going to be looking for a maximum financing amount equal to 35% of that individual's annual income. So the students are going to actually, if this is all they're doing, they're going to need somebody as a co-signer in order to show, or they're going to need to have some other income coming in for this program. I'll be the first to say it's not a perfect program, but it is, it does provide the flexibility and relatively, affordability on it. In terms of maximum debt to income, right? So if you take your income in a year and let's say it's, $50,000 a year, if you took all of your monthly payments and you tallied them up over the year, the debt portion of that should be no more than 25,000. So, in round numbers, you're talking 2,000 a month, right? So, that's kind of how the banks will look at kind of who's going to get approved for these loans. And so the big piece I think to think or keep in mind for the students is if they're not working, they're going to need to, have a co-borrower or a co-signer on board in order to get approved for this product. In terms of structure, this is really structured as like a line of credit. There's no deferral. Payments are due right away, and it's kind of you can draw down as they see fit. The rates, are currently between 9.5% and 11.5%, and I think most people when they see these numbers, and I'm a realist. Like I see these numbers, I'm like, oh, like really 9.5%, 11.5%, like. Are you kidding me? Like I can, get a mortgage on my house for 2%. Like that's insane. True. Of course, your mortgage on your house is guaranteed by the federal government. You're backing it. You don't have that here. In fact, there's not even anything securing these loans other than someone saying that they're going to pay it. Just their word, basically. So it's an unsecured loan. And so for those reasons, rate is going to be higher. So let me just try and benchmark this, I'm not going to try and sell you and tell you, look, 11% is great. It is what it is. I can get into the why in it in a little bit, but just as a keep this kind of in the back of your mind, like for every $10,000 that someone is financing, the difference between an 11% rate and a 6% rate, 5%, so nearly double, is $25 a month. It's not a huge total dollar amount. So I think, this is where like the dollars and the percentages are important to kind of keep in mind. And anyway, I'll get to that a little bit later on in the process. But I think it's important to, you've got to believe if someone's coming to you and your students are coming to you and they're saying, how can you refer this to me? It's 11%. You have to understand why it's a good idea. And so, I would encourage people that still don't, as we get to the Q&A part of this, let's talk about it a little bit more. So with that said, that's kind of it on the flight training side of the financing. So Chris, I don't know if you want to move over to the next slide, but we can get into the aircraft financing. So working with AOPA finance and generally pretty much anybody, mainstream out there, really the best option for flight schools is to consider a leaseback option. So if folks aren't familiar with what that means, it means like you as an individual would or somebody, as a part of the flight school that is able to obtain credit on their own and has income on their own outside of necessarily this business, can support a loan and will then lease back that plane to the flight school. I will tell you that I've found that this seems to be the easiest way to get financing for aircraft that are used in flight training. the requirements for that, it's going to be a maximum debt to income. Again, we talked about that ratio before being 50% on the other side, but a debt to income of 34 to 40%. And the bank is going to want to see a 1.5 times debt service coverage. So those two numbers are kind of the inverse of each other, sort of, if you will. They're also going to want to know that you've got the 24 months of global liquidity. So what does that mean? So that you've got enough in cash and marketable securities to make your payment for 24 months. So that's kind of what that number is. They want to make sure that you're not going to, run out of cash, if you have an event that comes up. The other piece that we see typically in this is there's a minimum dollar amount on the aircraft side for financing of about $100,000. And it's just because the logistics of it don't make sense economically, and that's just the way that the lenders in this space are comfortable. So let's talk a little bit about the structure in terms of how that's going to work. So on a leaseback, you're going to need to have 30% of the purchase amount as a down payment. The term is going to be, you can get a fixed rate, so 10-year fixed rate term for and at a 4.75 rate. So in terms of a regular, like, let's say Chris is looking to buy a plane for himself to fly, for him, his family, personal use, maybe incidental to business or whatever. In today's market, we would see that at around a 3.75 rate. So it's only 1% more. It's not a lot more. There's more risk involved. There's more paperwork in terms of the bank is going to need to do more on their end to monitor these. So that's why they charge a higher rate. So you see at the very bottom here in the slide, there's the other options. This is we'll hit to that next. There are other options, and we should get to that because the leaseback is not going to necessarily work for everybody. We've had lenders that come in and go out of this market that will do financing to flight schools directly over the years. And I will say that in today's market, there just isn't anyone that's going to mainstream do that, with an asterisk, and I'll explain that in a second. So this is typically the best. The leaseback is typically the best option for that. So anyway, I think in terms of getting into these other options, I think the first thing that's important is to sort of understand the why in this, right? Like, why aren't there really many other options, or why isn't this a particularly desirable space for banks to be lending to? And it just kind of boils down to risk and reward. In general, aircraft flight training use aircraft are not terribly expensive. So the loan amounts borrowed is not generally a very high dollar amount. And the total market, the number of people interested in this is actually pretty small in the grand scheme of things, compared to, say, auto financing or mortgages or whatever. So there's only so much that somebody's going to be able to do in this space. The other thing is, when things go wrong, usually they all go wrong. Like, it's, if there's a problem, the whole thing is a problem. So, there's been lenders that have gotten in and they've gotten out. And so that's unfortunately kind of the why in it. That said, it's not all doom and gloom. There is some good news. There are ways to do this that's not just a leaseback, and there's really two major options. If your flight school is in kind of a startup mode where you don't really have, or you've got less than 2 years of operations, I would tell you the best option for somebody looking to get financing for planes in a flight school is to look at an SBA loan. The good news in that is the SBA right now is really hungry to do loans, and they've actually done some stuff to make it not quite as painful as it's been historically to get it done. Austin's smiling because he knows SBA equals pain. There's a correlation between those two words. There's a lot of paperwork involved in an SBA loan, and it's because the SBA piece of it. It means that the government, the Small Business Association, is going to be guaranteeing these loans, and so there's recourse to the lenders first to the SBA on the guarantee. it's a really good option to explore, and it's really designed for startups. That's the right fit. I talk about this elsewhere, but like the right type of financing with the usage is really critical in everything. Where in this case, it's you're in a startup mode, you really do want this kind of lending. I've seen people come to me and they say, hey, I can get on a separate from flight training or anything related to flight schools. People say, well, I can get 1.5% interest from Merrill Lynch. And yeah, okay, that's true, because they're going to do what's called a margin loan, right? They're going to secure as collateral the loan, your all of your investments with them. That's not really apples and apples. That's apples and oranges. And that's not great for you, in that sense, because if you ever wanted to do anything with those securities, you wouldn't be able to. So, and I have that discussion there. I have that discussion here. Try and when you get the right intended financing for what you're looking to do, things generally work out best. And SBA is really best designed for that. There is another option, which is if the flight school has more than 2, 3, call it 3, 4 years of experience, and it's profitable, and there is financials that you can show that show retained earnings in the business, that you're not taking everything out, that there's still equity in the business. There are cases, bigger flight schools can get financing. There are cases for that out there. And I will tell you from a structure perspective, it's going to probably look fairly similar to the structure that we've laid out here for the leasebacks. Maybe the amortization, or the term and amortization could be shorter than 10 years. They may require a little more down depending on how strong the financials are. And the rate, is probably another 50 basis points more, so call it 5.25. That could potentially exist out there. And but I will tell you, mostly where we find people that have success in that, it's bigger flight schools that have got a number of aircraft, 4 or 5 aircraft. They're going to be able to kind of qualify for that. So it's hard to find, but occasionally, there are options out there. And the things that are most important to, and to keep in mind is you need to have, good financial records that show that you've got profitability, and more than just 1 year. You need to have at least 2 years of profitability and 2 years of, and rather that your balance sheet, right, for the company shows that you've got equity in the company. You're not taking everything out. So those are, really the best of the 2 other options that exist for aircraft financing. And with that said, I don't really have a whole lot more to necessarily talk about specifically in terms of this slideshow for, I don't think, did I have another slide? I'm getting old. No, I didn't. Good. Anyway, that was kind of it for me on the aircraft financing side. So I think, Austin and I really wanted to open this up and make it interactive, because as Chris said, this is really exciting stuff. So anyway.
So yeah, we definitely want to open up for questions. We can see on the slide I've got up here, we've got both Austin's and Adam's contact information there for you, plus links. You can see the web links there. I will attempt to put those into the chat for you here in a second. And so what we want to do is, open it up. And then one question I know that I had was for Austin, or for both of you guys either, is, you gave some tips on, some things to look for, some of the questions. What are some of the answers to those questions? Could you give us some things where it's be fair? And I appreciated Adam kind of giving us those interest rates, kind of saying, okay, this is probably where they're going to be. So give us some ideas, or maybe what's fair. And then obviously, if anybody has any questions, please raise your hand. We'll be glad to call on you, or post it in the meeting chat there, and we will let these guys give you all of their wisdom.
It'll be a quick conversation. At least for me, anyway.
Yeah, I would say, framing up the fair. I think the programs we've seen, at least on the student financing, is when there is a partnership between the financer, the students, and the school. Everybody's kind of has some kind of risk sharing in the program that gets everybody involved, and kind of acts as a good check that we're not just forcing things through the program for our own benefit. So, I like that risk sharing. I like it when it's transparent and very clearly outlined, like, hey, here's here's what the financer is going to take on their portion, here's what the student has to take on, and here's what you as the school has to take on. So, transparency and some kind of buy-in from all parties involved, I think, are the key components I look for.
So maybe in that sense, if it feels sketchy, it probably is.
Yeah.
That's what it's like. Go ahead.
Yeah, no, I think that's good, Austin, and agreed. A partnership ought to work all the way around for everybody. Absolutely.
We do have a question from the audience. Tomas, I'm hoping I'm pronouncing your name correctly. Says, for student financing, does the student have to be on a commercial pilot track, or can they just do it for a private pilot or instrument?
So I'll jump in. For our program, we encourage the school to limit it to commercial pilots, but our minimum financing that we offer is $5,000 for the student financing. So obviously, any part of the certification process really covers that $5,000. So you have the option of that, but as part of that risk sharing component, it really influences the school to kind of hone in on just commercial pilot tracks.
And Austin, do you want to go ahead and name the program that you guys have too, just so they can find that easier? Or
yeah, so our program is titled Skybound, which I just recently had some shirts printed up, so I feel like I'm doing a good job marketing today wearing the shirt with the presentation. But yeah, Skybound program, it was founded in 2013 by our CEO at the time, who's now retired and become our chairman, but he himself is a private pilot, heavily involved in FSANA, and so that's kind of what triggered just a small community bank to get into this space and carve out our own niche. So.
Awesome, thanks. So Skybound, and I do have a link that I put in the chat there. You can scroll back and see. Adam, did you want to address that either? Go ahead. Yeah.
Yeah, absolutely. So, there are. Let me just take a step back, which is 141 versus 61, right? So 141 programs is where we typically see you've got a bundled financing. A lot of these programs will have bundled finance in with them. And so when we started looking at trying to fill the gaps, we really didn't look at a 141 scenario. We were really more looking to fill in for the Part 61. And so not to say Part 61 isn't someone that's on a commercial track and going to go right from 0 to hero. That they can for sure through that. But more of our membership is really looking for, hey, I want to get my instrument rating, I want to get my multi-engine, a tail wheel, whatever. And so the program that we offer doesn't have any sort of contingencies or requirements for going through commercial. It's designed from intentionally from the beginning to be flexible. So yeah, we can do that.
Well, and then I know we've got some follow-up questions in here. I think it applies to both of you guys. So maybe we'll start with Adam first. It says, I missed what max allowable, and it says 2 questions in here. So I missed what the max allowable was that could be borrowed for a student. What was that number? And then the other one was it a percentage of their income? That was the question. So
the max for the program that we have is $100,000. That said, you've got to have debt to income to support that, right? So, there's someone that's borrowing $100,000 for that program would need to have, over $200,000 in broad strokes, right? Assuming no other debts. So, let's say they've got a mortgage and whatever else, you're probably talking $250,000 a year in order to borrow, probably $100,000 for this program. So I think, sorry, I was trying to find in here too, Chris, the question. I lost it in my.
Oh, the other one was it a percentage of their income? And then the other part was, what was the max number? So.
Yeah, so there is a cap and there is a percentage max. So both. So that's, the most you can do is 100,000, and it is generally driven based on total income.
Okay. And then, yeah, perfect. Thanks. And then Austin, you want to take the same question?
Yeah. So, much like Adam, our max is 100,000 as well. So I'm glad that we synced up there pretty well. We also have a caveat that it's 90% of the cost of the school. So that's where the student risk share comes in, that we like that the student go ahead and put 10% down. Make sure at that point it's a good determination too, if they're going to go through with the full program or not. So it's good to kind of burn their money first before we lever them up with debt. And then secondly, as far as the debt to income, we don't do a debt to income calculation on the front. So that's kind of where we're more geared toward that commercial tract is we're kind of looking forward to that future income more than their current income. And also a lot of times we understand that if they are on that commercial track, that becomes their full-time job is getting through the school. So that's a little bit difference there. But yeah, we had the 100,000 and then capped at 90% of the cost of school.
Cool. Thank you. And we got another follow-up question from, it looks like Tomas again. It says, when deciding on a, okay, so yeah, we've got a couple follow-ups here. So the first one, when deciding on a loan amount, actually, let me take, it looks like it's Lance Christian. Let me take that one first. It's just, do you guys have any literature on both programs? I figured that's probably a shorter answer to start with, the follow-up. So I'm assuming we got literature they could contact you for, or?
Yeah, yes. There's, you can either reach out to me directly and we can give you a link to it. I think I've got to double check, but you should be able to access some of this stuff through our website. But if not, feel free to, I can just either reach out to me or the AOPA info box, AOPA finance info box. I'll send that in.
Okay. And then Austin?
So like I iterated earlier, we do have that partnership aspect. So we actually will vet the school first to make sure that they fit the Skybound program. So after we've done that vetting, we do have some literature and marketing materials we'll provide the school that they can, brochure type that they can set out on a desk or send out through electronic media.
So just to recap, and I'm going to get to Tomas's question here, is it sounds like, just so you can get kind of a big picture of the difference, or to reiterate that, it definitely sounds like that with AOPAs, obviously we're a general aviation organization. Ours is really geared towards someone flying GA. It's for the individual ratings, and so that's why and in that sense, it's a personal loan and it's flexible. Whereas Austin and FMS, you guys are definitely on that more of that career track type of loan, and you work with, and in fact, I know that you described to me when we first talked a month or so ago, whatever that was, about how they vet the school and you work with the school, and there's a whole program involved there versus it being just with the student themselves. So I think that's an interesting thing. I'm sure they can find out more, and perhaps we end up talking more about it. But let me get back to Tomas's question. It says, when deciding on a loan amount for the commercial track, do you have a standard loan amount? And then it also says, does the school establish it based on minimums, on a more realistic number? We are 141, so we have very clear minimums. So he's looking for that standard loan amount, and how do you establish it from the school? I'm assuming that's going to go to Austin.
Yeah.
Yeah. So for the 141, what our process looks like is the student will actually apply through your website. We do use a third-party servicer. They do the approval of all that. The student, I think, initially plugs in a loan amount that they're requesting, and then once they've gotten approval from the servicer will contact the school and verify that cost matches, and also give you the option of how you want it dispersed, whether you want the full amount sent to the school, or if you're going to break it up every 3 months, and split it up that way. So it gives the school that verification that the loan amount does match what that specific student should be asking for, and then B, how the school receives those funds.
Perfect. All right. So there's definitely a process in place, and I'm assuming it's probably laid out on the website as well, and you'll work your way through it. All right. And remember, anybody else that has questions, feel free to raise your hand or post them in the chat. I want to ask the general, actually, one of the questions I had too is that I remember when I was instructing full time, we saw people that would come through, especially in a 141 program, doing a VA loan or VA using their GI benefits, or other. And I also remember people doing, like, was it Sally Mae or something like that, Freddie Mac, that kind of, I forget which one is which, forgive me. But do you guys, any information on that? Are they still doing that sort of thing, or is that kind of gone now? Either one of you, maybe I see both of you guys shaking your heads or nodding your heads. I mean,
yeah. Well, Sally Mae, I don't know, Austin, you may know this. I think Sally Mae does still exist, but I think as part of the requirement, you have to be getting, if I understand correctly, a degree of some kind from a school. So it's kind of affiliated. There's an educational component to it other than just the actual flight training itself, I think, is the requirement on the Sally Mae stuff, Chris. As far as the VA loans go, yeah, you're right. I remember seeing that stuff, gosh, going back man, it seems like maybe 8, 9 years anyway, but where that was happening more and more. And I think that they had a program in place that was trying to push this, for advancing career. I wished I knew more about the VA side of it than I do. I just don't have a good answer on that. But if you are military or former military, you can get a VA loan. I'd absolutely, definitely look into that. Having family members that are military, I can tell you that in general, when they do this kind of stuff, it's really a good deal for you. So look to utilize that.
Okay, thanks, Adam. And then Austin, do you have anything else you wanted to add to that, or?
I'll back up, Adam, that we do have some schools that that offer the Sallie Mae. They do have to be going through a degree program, so that adds generally a little bit more cost to the student. So that's kind of the trade-off there. But the way we do our certification does allow things like VA benefits and GI bills to be applied to the school, and that's where the school can kind of come in and say, hey, we know they're going to get $20,000 towards the school from this source, so we only need the rest of it in the loan amount, and that's how the process is handled through our side.
Cool. And I see that clearly the big picture here, it's all these different structures that are happening. So with the Sallie Mae type of thing, that maybe those schools that have a college program, they've hooked up with a university. I know Liberty does a lot of that stuff. Embry-Riddle's done some of them. So things like that, if you're with one of those college programs, maybe that's something you can also look at as an additional option. But obviously, like you said, it's going to raise the cost because you're paying for tuition as well on top of the flight training versus those that might just want to do that. We did have someone say here, Sallie Mae does exist. This is from, I guess it's Lance, that they have a minimum revenue that the company must meet before being a partner. And we've looked into them for many years. So obviously some other requirements there too that could make it more challenging, but potential options. Now, Elliot has said, we are a Part 61 school with a highly structured syllabus. Good. I'm a big promoter of that. So I'm hoping you were on our session last time. I heard one of the presenters say that they do work with 61 schools, Part 61 schools. Which one or do both do that? So I know that, Adam, that you do.
No problem.
With our program?
Yep.
Right.
No problem.
And then,
absolutely.
And Austin, do you guys have any programs that would do 61? I know that your real program is 141, and it sounds like it's pretty robust.
Yeah. So we do partner with 61s on occasion. We like them to be 141 compliant and maybe in the process of going that 141, just because, again, we're trying to get that commercial tracked. So that generally helps out or syncs up a little bit better.
So again, so it'd be Part 61 potential, but you want to see that structure, and really you want to see a professional track happening to be wanting to work with you. Perfect. Okay. Thank you. All right. So again, any other questions? Pop them in there. We'll be glad to answer, or raise your hand. We'll be glad to chat with you guys. I want to ask you guys questions as we're getting close to the end of our time. We've got about maybe 10 minutes left. And then Elliot says we'll be in touch. So any words of wisdom as these folks are kind of going out? Obviously, we brought you guys on, so we feel like your programs are going to be definitely ones they should check out. But any words of wisdom as they're seeking financing on any of the stuff, whether it's seeking out student lending or for the aircraft side as well, that you would give them, like things that maybe they want to avoid, or things that you've seen that would be something like really watch for this and be careful? Anything you guys can think of along those lines?
I keep jumping in first. So Austin, I'm gonna let you go.
I'll give you kudos though. Adam brought up a good point that the SBA is definitely something to give a lot of consideration right now. They're waiving a lot of their fees that they traditionally charge with loans origination to help with the pandemic. There's some deferment of payments currently being offered right now. Secondly, and a separate discussion, if you haven't participated in their PPP program, that's going to sunset at May 31st, but that was a really beneficial program for a lot of small businesses, and pilot or flight schools would fall underneath that as well. So definitely encourage you to look into that, and kind of to reiterate a point Chris made, a lot of times if it sounds too good to be true, there probably is either something that's missing or that may be the case. So definitely vet these out. The viability part is a big thing for me to consider. You don't want to bring in an option and that go away shortly. So that would be my words of wisdom.
Awesome. Thanks, Austin. Adam?
Yeah, I mean, obviously too good to be true. Like it's funny you said that. That was exactly the words coming to my mind as Chris was asking a question. you know, I don't know a lot about the Sally Mae. I've also heard in Austin, maybe you know this, but like the rates for that program aren't necessarily that great either, which I frankly would have thought that they would be better. That they were still in the 8 or 9%, which surprises me with the because it is a government backed program, that you wouldn't have better rates than that. But I would say in terms of words of wisdom, right? Ask questions and reach out to Austin, reach out to me. Both of us happy to help you guys, sort through some of these questions and figure out what makes sense. I think probably the biggest thing I would recommend, especially as a former business owner of my own, I had my own business and sold it. Having good financials and good financial controls is always really helpful when you're looking to get financing. I mean, I'm sure, Austin, I don't know what your requirements are for schools that you'd look at, but, I'm sure that you're going to probably want to know that they're financially, that they're in good shape too. And, I think it's understandable, like I said, and I had my own business. I get it, taking money out and not necessarily worrying about things like retained earnings, which for those who are not, CPAs or accountants or financial folks, means that there's still some equity, if you will, back in the company. You haven't drained all of the cash out of it, that there's still tangible value in the actual business itself. And it's easy to be guilty of taking money out when you need it and, kind of treating it like it's your own money because it is your own business. But I think, to the extent that you can, use discretion in that and keep money in the school in the long run, that helps open up the options for you. I don't know. I think that's probably the biggest thing I can say. Is a boring thing to say, but it's true. It's helpful.
Not boring though, but it's important, right, to make you have those things. So again, thanks both you guys. We do have a question there. It says, is there a good phone number in the chat from Mauricio to reach out to both Adam and or Austin? So if you guys are willing to share, feel free. I know we got emails on there right on the screen. So it's alz@fmsbank.com and then adam.meredith@aopafinance.com. One thing that we'll do is Austin just put his number in there. Appreciate that. And I think Adam's is popping up here in a second. So let's go ahead and just we'll wrap things up just to give you guys be respectful of your time. The last thing we wanted to do was just remind you that in 2021, actually the next couple of months we've got laid out here. Next month in May, we are doing a demo of AOPA's Flight Training Advantage app. We've just actually done a soft launch of that. So if you're interested in seeing what that does, please join us for that one. We'll put out emails for that as we always do. And then in June, we're going to be talking about the upcoming Flight Training Experience Survey. So we'll do a little deep dive into that. That said, I want to thank everybody for being here. I want to say a special thanks to both Adam and Austin. We really appreciate you being here. A wealth of wisdom, and the fact that you guys have sounds like some good programs that they can check out, and would just be glad to have. And oops, wrong number there, so check that out.
Yeah, wrong number. Use the other ones. It'll work better. Yeah.
So anyway, again, appreciate you guys both being here so much, and thanks everybody else for joining, and hopefully we'll see you next month.
Chris, thanks for having us on. Austin, it's great work doing this with you.
Yeah, thank you guys all for attending.
Thanks, everybody.
All right, Stephen.
Close us out here.